Good day, everyone, and welcome to Wednesday live trading session. You can see market is very slow. We have a very low volatility now, and it's not moving much. But it's not a problem because if we don't get into a market order, we will definitely go with some pending orders. Okay. So before we start, as always, Wednesday live trading session, same time with me. It's Wednesday, each Wednesday, exclusive with Admiral Markets, and we do market orders, pending orders, master candle setups, and wool wave setups, depending what we actually see and what we trade. Patience is the key to trading success, and you definitely need to have patience in order to be profitable in world of forex trading and generally in world of trading. At this point, we need to say that, course, for all of you who are new here, standard risk disclaimer explaining all the risks associated with forex market, and you need to know that every form of trading involves risk. So every form of trading involves risk. Before we start, please read the full risk disclaimer and have in mind that CFD and Forex trading are leveraged products and can result in losses that exceed your deposit. This is not a part of the .co.uk website, but the globalnews.com website. This is my opinion, these are my accounts, and I show you how I trade here. Rules and setups for our live trading session. We use POC zones, master candle setups, wool waves, and of course price action. Uh, we also do market on pending orders. We don't do scalping. We do positional or breakout trading. Also, if we don't see any setup, we don't make any trade. That is why we use pending orders. Once you're in a trade, you need to do your own trade and money management. Recommended risk is 0.5 to 1% per trade and never ever exceed that 2% of trade, because if you do, guys, you need to know you will be probably a bit agitated if you lose, and you might start to overtrade and make revenge trades that can be very dangerous to your account. So you want to trade like professionals do, you want to trade like big banks, you want to trade like institutional traders, okay? And have in mind that losing is also part of the business, so keep your risk under control. So far, our session recaps have been very successful, and also a follow-up in the form of live Wednesday trading sessions. Every single of them so far has been profitable. As you can see, it's just the matter where you take your profits, if you protect your trade or not. Uh, in this next 1 hour, we will try to capture some moves. If not, have in mind that these setups that I present you today are valid for today, tomorrow, and until early Friday. Friday is day to take profits. Institutional players and traders always take profits on Friday, so you need to use profit stops. They don't want to carry the risk over the weekend. Okay, trading opportunity. I will go into another buy opportunity on euro dollar, but I might also do few trades now, guys. Now watch me, please. Uh, First trading opportunity is actually this is typo. We will not sell. We will buy at. Let me correct this. We will buy at 490, but because my account is higher, I can afford possibly two positions. So guys, now I will make a market order. Okay, this will be another buy if it drops. The reasons for my order I will explain. Let me enter the market first. Okay, so this is it. Buy trade here, but now I will be making also a market order. Okay, so here, euro dollar, I will go with a market order at this point. Okay, just a smaller one. Okay, market order has been placed. Okay, it's euro dollar. Okay, 15.35. Okay, 15.35. is market order. Have in mind that I will add now another order for euro dollar at 14.90. It will be so-called scaling in. Now I'm showing you how to scale in. Okay. New order will come. Okay. So let me do it like this. I will use scaling in. Okay. 0.20 lots. Okay. But we actually need to do a pending order. Okay. Pending order will be, okay, a limit. Actually, it's a little bit, if you see that it's a little bit slow, you need to know that I work with multiple monitor setup, and definitely sometimes you might see a small lag, but this is very clear what I will do. So here 114.90 is a buy stop with a stop loss at my stop loss will be at 14.30. My final target is 1.06. Okay, this is what I will do. Oh yeah, this is actually, I didn't see this. This should be a buy limit order here. Okay, so buy limit. We have market order. We have buy limit order. Stop loss is the same. Okay, stop loss is the same. We will not move our stop loss. Okay, so it needs to stay the same. If you make a stop loss and you use scaling in technique, you need to know that your stop loss should remain the same. Okay, so 14.30 is stop loss for euro. If it goes down, we will go into scaling in. Final target is 16.00. Okay, so I'm managing multiple accounts here. So sometimes you will see also that I have that I also run my follow-up to Monday session recap. Okay, and the example is also here. Okay, you will see this is my another account that I run here. Okay, and here you will also see that I still have some long opportunities on dollar. Let me just show you my screen. Okay, this is a little bit really annoying when you need to change these monitors, but still it's normal. Okay, so here I'm still running a buy setup. I already made profits. I already made profits from my session recap, but I entered again because I saw that there is a lot of rejections here at this spot. So you can see a lot of also stop orders. For novice traders, I don't recommend that you do this as I do because maybe you don't know what you're doing, but I can explain. Here, guys, it's easy. It's easy. These are stop orders. If a pound dollar breaks these levels, these are stops that should be triggered and spike the price to final target. But this is, as I say, a follow-up to my Monday session recap. So I already made profits a couple of times on going long from 30, 15, 30, 20 region. So this is what I will put. I will close my trade manually if it breaks 30.00. But this is just a follow-up. Okay, so that is it. Another trade. Okay, you don't need to do this if you made profits. If you already made profits, guys, you don't need to do this. This is just for your reference that I'm still running some long positions on pound dollar. Also on euro dollar, here 1535 is market order. This is bigger account, so it has some bigger positions. So 1535 is my first entry. I will add at 1490, okay? And my final target is 1600. Stop loss for this trade is 1430. So let me write it down here. So we have buy limit order, but also we placed market order. Buy market order here 1.1535. Stop loss is the same. We don't move our stop loss. 1.1430. So we don't move our stop loss. This is so-called scaling in technique. And you need to know, guys, that if you trade like this, the overall risk for these trades should never exceed 2%. If you go with 3%, then if you have other setups, and still we have one more setup for euro yen, you need to know that you never ever risk more than 5% of your account. If you risk more than 5%, it's up to you. Of course, with bigger risk, you can earn more, but it's up to you how much you're willing to risk. The thing with trading is everyone can trade the same system and the same method, but every single of us will have different results, guys. It's because trading and the holy grail of trading is so-called money management, and I am a guy and a full-time trader, your mentor, who will always remind you that proper money management is the key to success in Forex market. Even though if you have 30% accurate trades, and if you don't have like 70-80% of accuracy, you still can be profitable if you do proper money management. It does not have to do anything with risk to reward. Forget about risk to reward. Proper money management is the key. You can always, I already explained that day trading is not about risk to reward, because if euro dollar has 70 pips of ATR, if we get 35 pips, that's 50%. It's great, right? But still, guys, if you want to, let's say, trade GBP New Zealand, you look at this 156 ATR. So you want at least 70-80 pips. So 80 pips compared to 35 of euro dollar, it's not the same. So we cannot talk about risk to reward when you trade on intraday time frames. Intraday time frames, if you leave your trade like 1 or 2 days, you need to have precise entry. You need to be accurate, but even more important is the money management, how you will treat your trade. If you add to your winning position, if you add to if price is retreating into the zone, but still keeping the risk small. So if I lose my trade, let's say if I lose my trade, I lost only 2%. But if I get a scalping opportunity, I will probably get this back. Most of the time I do, because my entries are bit accurate. But then again, I still do not risk more than 5%. I personally can afford to risk more because I'm a full-time trader, but for all of you who trade and novice traders, do not do more than 5%. Rarely my risk goes more than 8%. But it's my, I have experience. It's not the same as for new traders. Definitely it's different. So here also on this account, I have buy position. This sell stop is a typo. I will remove this because definitely I will not do any sell stop. But also guys, it's very, very important to know that this kind of money management, I will explain. You don't need to do this. because this is different account, and this account can afford to have these kind of entries. This is so-called imbalance hedging method. So for this account, I don't use stop loss in a traditional sense. I use hedging method, and it's a form of a grid hedge. In one of my blogs, I might explain this. It's a little bit complicated, but let's say that I can afford 10 trades in a row, and still my account, even if all the 10 trades go in a loss, I will not lose more than 16%. That is a kind of money management I do. I also use uh, some robots for this, so it does automatically for me. And you need to have a virtual private server for that if you use expert advisors. But definitely, this is something that it's a different topic. At this point, I want to stress out why I did pound dollar trade. Okay, and of course, my personal method is called Camarilla MACD, and I will explain. Okay, and the reasons. This is the account that used stop losses, so I will stop my trade if it goes below 30.00. I will stop it around 29.98. But you can see I'm still running some long positions because I'm risking profits, guys. Now I'm risking profits that I made on session recap. If you followed my session recap, you know that I was long at 30.10. I made profits, so I'm risking my profits. I'm not risking my anything but profits. So it's also a form of money management. So why did we do this? Simply because we have a weekly support here. It's L3, very strong. This is confluence zone, EMA 89. The price is also above daily L3. The price is making higher highs and higher lows. This is now consolidation. It might go down, but you know, trading is always risk. So this is uptrend, and the price is in the POC zone. So that is why it's trying to go up. It doesn't mean it will go up, but definitely it's trying to go up. So we still need to see what will happen. Weekly L3, daily L3, ATR pivot point, buyers here, buyers in the history, uptrend here. As long as this let's say mini trend line holds here, longs are safe. If it goes down, then it could drop to daily L4. But I don't know if it will go down. I went long again, so let's see. Another trade that is running now at this point is euro dollar. As I said, if you take the risk that I take, you can see here it's 0. I mean, for this account, it's 0.25. For your account, it can be more, it can be less. It's important to know that stop loss is bigger because this is what I want to do also as a form of a swing trade. For that, I'm using 4-hour time frame. So this is a swing trade on euro dollar. First position is 15.34. Next position is 14.90. I will not move my stop loss. My stop loss is 14.30. So this is so-called swing trade. Okay, I will try to use this swing until Friday, and if I'm in profit, I might close my trade on Friday. Paul is asking, do you always trade 1-hour time frame? Most of the time, but now, Paul, I made this trade on a 4-hour time frame, as you can see, because this is swing trade. Okay, Camarilla is saying that we are above weekly H3. We went to weekly H5. Okay, what it means in Camarilla trading, it means that the price is very bullish. It also broke a monthly H3 support. It retested monthly H3 support. So it could be a continuation trade towards monthly H4, that is 1.166003. I don't go precisely with those 03s, 02s, and so on. I usually use rounded numbers because banks also like to trade with rounded numbers. But simply said, look at the power of Camarilla. Camarilla is so perfect. I really like it, and I always been a big fan, and this is why I like to use it. It tells me a lot. We also have this box indicator that tells us that basically 3 consecutive days we had an uptrend. Now we are in retracement. When are we buying? We are buying in retracement. I could have waited for CCI to get into the oversold territory, as I'll always do, but because of this monthly H3, weekly H3 has been broken, weekly H4 has been broken, I decided to make one entry here, but also I have another limit order here. So if I get into the profit, my profits will exponentially go up. If I lose this trade, I will lose the trade, but it will not be that bad because this loss will also be lower than if I had entered with 0.45 lots. You understand the point? I mean, everything is about money management. What traders do, and when traders make mistakes, is when they move their stop loss a bit lower. You never do that, guys. You never do that, because this is your risk. This is what you're willing to risk in order to make money. This is what you want to do in order to make money. You cannot just pull your stop loss and wait and just hopelessly wait that the price turns. It might turn, it might not turn. But if it gets into your habit, it won't be good to your account. Also, let me show you something else. Let me just pull Fibonacci tool here. Fibonacci retracement. Okay. Here, guys. You see now, 23.6. So, it's 23.6 retracement. Shows up in strong trends. It shows up in very strong trends. So, one of the reasons I also went with 1534 entry is this 23.6. So we still have the room to support. So one more trade will be added here. Stop loss will not be moved. But on the average, if it gets here and gets above my entry points, I will be in profit. Calculate the risk on your own account. Some people will use 0.01. Some people will use 0.50. Maybe some traders trade with bigger risk. Guy, I cannot tell you to trade with a bigger risk if you're not willing to accept the risk. I always recommend trading with lower risk because that will keep you safe. Maybe you will not earn like 50-60% of profits in 3, 4, 5, 6 months, but you don't need to. Always think that banks give you 1% per year and your money is safe, usually with banks, right? So when you trade, you always want to keep your money safe, but if you want to keep it safe, your risk needs to be lower. Of course, if you're a gambler, now what I'm saying about the risk will not apply to you because gamblers never listen to me regarding the risk. They always want to risk much more than I personally suggest to. So you really need to decide what your risk will be. And as I say, every single of us can trade the price differently. And even though if we trade the same method, it means that usually 99% of time our result will be different. Okay, it's because of that always mentioned risk. Okay, so at this point we can basically see that the price on euro dollar is still bullish, but we need to wait for this trade to develop. Okay, and definitely it's about patience now. So First entry market order 1534 for all of you who joined up later. Buy limit order at 4090. Okay. Stop loss 1430. Final target is 1600. Let's see what we will get from this trade. But this looks like a zigzag to me. Really, this is a zigzag with some corrections. But yet again, it's totally price action Camarilla style with confluence zones. This is the POC zone, suggesting, as I explained, WH3 broke, WH4 broke to the upside, and WH5 final Camarilla level above. We have monthly. So if the price goes from monthly H3 to monthly H4, this also adds another weight to our good entry here. Okay, let's answer some questions. But before that, one more setup if it happens. I'm not sure that it will, but here, okay, Euro yen buy limit order 148.40, 127.70, TP 129.50. Okay, so this is what I think we might have on Euro yen. Let me show you the chart. So Euro yen. Okay, I really need to do it like this and switch monitor again. Okay, Euro yen. Wait, just a second. Need to find that Euro yen here. Okay. And I will use Camarilla pivots for this. Okay. Camarilla here. This is strong uptrend. And now we see correction. Okay. This is purely Camarilla now. Okay. Camarilla. And here, 4-hour time frame is used, as you can see from my chart. Definitely 128.40 can be an entry. 127.70 is stop. And 129.50 is the target. Okay. Do you see it? You should see the screen. And why? Because here we have on 4-hour time frame uptrend. Price has not tested WL3 level. So I think the price could get here 128.40. Okay. Stop loss should go here. Okay. 127.70. Okay. Below this weekly L4. Okay. Don't look at this. This is for grid, imbalance grid type of money management. Is suggested longs. So here you can see big uptrend, and definitely we have also buyers here at this region. A lot of buyers here. So if price gets to 128.40, it could go up. It already broke through H3, then it went down. So it tells me that this level can be retested again. Okay, it can be retested again because this is a zigzag uptrend. Okay, double bottom, yes, Marco, this is double bottom indeed, and here to 128.40 for me is also very attractive. I think that even 50 could be an entry, but I would wait. I would really wait to see if the price drops here. I might add a smaller entry around 128.50, but 148.40 could be, it's like perfect entry for this. This is lean head and shoulders, indeed. But have in mind that on 4-hour time frame, It really needs to break through the trend line and neckline in order to be qualified for a change of the trend. If you watch this trend line, okay, you see that it's broken. And if this is indeed lean head and shoulders, then, guys, usually these kind of patterns on 4-hour can be fake. And what might happen is slight, these are now moment sellers. So it can be slight selling, hitting this region again, then going up towards H3. Then what happens is, if you get entry here, you need to watch, this will be resistance, this neckline. So usually what happens, price gets down, it's rejected, gets here, so it will be either make it or break it. So then you protect your profits here. It's like resistance, nothing more than that. Okay? So you understand my point. It's just a resistance. You don't need to be afraid of resistance. Very often it can happen. Let me see if I can find an example. Let's see, pound yen here. Yes, this is not head and shoulders, but this is rather a form of M pattern. But what happened here? Price actually tested 146.70. And this is pound yen. And watch this. Exactly at this point, the price was rejected for 60 pips, guys. You see, it's 60 pip rejection. But why did it stop here? Because of this. You see this. This could have been inverted head and shoulders, but it couldn't go more to the upside. This was cluster of resistance here. Watch historical resistance here. So even though purely trading Camarilla could have made you 60 pips here. Straight rejection from WL3 towards H3, but here we had a cluster of resistance. So it went below L4. It was a small sell. This was a breakout. And now it's also stopping because of historical support here. So you need to always watch the full price potential on each time frame. This could go to weekly L5, but I think I will make a blind trade at weekly L5 because this 144.85 is very, very strong level. So if it gets there, I think I will at least make a scalp trade. For me, this can go here, but then I will go with another buy position. But this could be a scalp trade because this is very strong level, weekly L5. Let me buy limit. I will place a couple of buy limit orders here. I mean, this is naked trade. I really sometimes I do this because I am, as you know, guys, I'm very, very relaxed when I trade. So if it gets there, you can see I added 2 positions. So I will treat this as a scalp swing trade. And this will be my first resistance here. So 145.26, 100. So I can make like 40 pips here. My stop loss for this trade will be 30 pips, not more than 30 pips. Okay. So let's say 144.50 will be my stop loss. It's slightly more, but this is a form of naked scalping just by using Camarilla pivot points. Pound dollar, I'm still up on pound dollar. It's rejecting also here weekly L3, and due to the reasons I already stated, it's very, very clear that this is the POC zone. Weekly L3, EMA 89. We can also put Fibonacci here. You can always say that it's a subjective thing, but if you go just with previous swings, highs and lows, you can see it's 50 retracement, exactly a WL3 trend line here. So it's still going up. Euro dollar is, yeah, it's on another account. My euro dollar trade. Euro dollar is, I think this will also go up. Uh, as I say, euro dollar is bullish, so we have already orders there. Buy and buy limit order with a clear stop loss. 4-hour trading, guys. This is also a form of intraday, intra-week trading, so it's bit also relaxed trading. Okay, now we can go through questions, and I think that I showed you most of the price. Let's go with question. Daniel is asking what I think about Australian dollar New Zealand. Australian dollar New Zealand. Look at this, Daniel. This is a very tricky. I think that it could reject from this point because it made a double top. So what you can do with this? You can go with a short trade, risking 1%. If it breaks double top, you go with trigger happy trade, risking 2% of trade. So if you lose both, you will lose only 3%. If you lose first and you win second, you will be in profit. That is what I think about Australian dollar New Zealand. I think that this could break here because it closed below weekly H4. This could break to the downside indeed. Yes. Next question. Angel, what I think about gold? Okay, let's see the gold. Oh, okay, here. Okay, definitely trapped between weekly H3 and weekly H4 Camarilla pivot point. It's in the range between monthly L3 and monthly H3. So what it tells me that it's ranging price action. What you can do is basically try to sell here, put stop loss above this region, and if it breaks this, you go with a scalp trade. Same with, as I explained, with Australian dollar New Zealand. Risk 1%. If you lose, risk 2% for a buy breakout. And if you win this trade, you will be in profit. This is bit of, you can see how price respects my Camarilla pivot point. Very good. For this Camarilla, just send me an email. Send me an email and I will explain everything. Just send me an email. Okay, so no problem at all. I mean, guys, Camarilla is best pivot for me simply because I've been using it. I am the creator of Camarilla MACD method. I've been making very successful trades and analysis with it, and banks trade with it. So why don't we use the leverage of banks to earn profits in Forex market, right? It's always like that, guys. You need to follow what institutional players do. Gulad is saying, I've been using Camarilla. It made a big difference, helps with confluence. Indeed, that is what I always say. You always want to watch the confluence, not just one single piece of price action. Brian is asking me, can you look at Australian dollar? Sure, Brian. This is Australian dollar. Your entry, you see, with Camarilla trading. What you do is, when you see this is Marubozu candle. It broke through WH3. When it breaks H3, you wait for the price to retreat and you go with buy order. You can also you could have made buy order here. Now it wants to go to weekly H5. When it gets to weekly H5, this is the confluence. You place your stop, you place your sell here. If you get into sell position, you sell here risking 1%. If it breaks above, you add you then close your sell and go with a scalp trade risking 2%. If you lose, then you will lose 3%. If you win, you will make it up. This is what I can tell you. This is bullish. So it can go to weekly reject, but treat this as a sort of intraday to small intra-week position if it's rejected from weekly H4. Because you see, it broke through weekly H3, it retested weekly H3, and we have a confluence of ATR high with weekly H4. It's again between weekly H3 and weekly H4. Marianne is saying, send an email. Please send an email, and I will explain everything about this Camarilla indicator, definitely for all of you guys who trade with Admiral Markets. Okay, here. Just use my email and I will explain. Dollar yen, next question. Okay, guys, watch this. This is dollar yen. Sometimes you need to change time frames like this in order for Camarilla levels to calculate themselves. Okay. Okay. This is it. It's between weekly L3 and weekly L4. When it touched weekly L3, what I say always, we always trade the first touch. So this was the first touch here. It went 35 pips, then it was rejected. You see this? This is why it was rejected. Now it wants to go to weekly L4. So what can happen is the price can get to weekly L4, and here I think you can make a buy entry. I will place buy limit order here definitely. This is big confluence. 111.29. I will keep this until Friday and see if this will be hit. It's monthly L3, weekly L4, ATR, watch this, ATR low. And if we get Fibonacci, I'm sure that this is I'm sure as a trader that this could be a good trade, 88.6. So, okay, 111.30 buy entry, 110.80 is stop loss. I will add this to my slide. Okay, so market order, market dollar yen, buy limit order 111. Let me check once more. $111.30. 111.30. Stop loss 110.80. And final TP, of course, you need to manage your trade, will be 111.90. Okay, 111.90. Final TP. The risk is 1% here. Okay. So it's a bit clear now. Okay, so I hope that this helped. Let's see pound dollar profits here. Still, my pound dollar trade on this account is also in profits. And yeah, definitely nice profits from both of these accounts. Wait, let me move my other screen here. Okay, nice. Let's see what we will have. Euro dollar also going up. Euro dollar going up also on this account. And I think this could be nice run. But let's see. This is very clear. Paul is saying, I know you like 88.6, but I cannot find that on my fib. Easy. I will show you how. Okay, this is how you do it. Let me show you dollar yen. This is where you see my 88.6. Now, what you do, go to objects list. Okay, when you go to objects list, now bear with me, please. Because I'm using multiple setups and really I have tons of programs running. It could be a little bit slow, but just have patience, so I will explain. Oh, this is really okay. This is now okay. Okay, here, go to fib and press edit. Then you need to add it manually. Okay, you need to add level 0.886 and description 88.6 percentage and dollar sign is to show you fib levels. So you just double click, add 1.006 and 88.6 and press percentage and dollar, and then press add and it will be shown on your chart. Okay, Paul, I hope this explains. Marco is asking, what is dollar yen entry? Pending order has been made on 111.30, stop loss 110.80, TP 111.90. This is it. Okay, guys, I think that I explained everything. So we have buy market order with euro dollar. We have 14.90 and 14.30 buy market order. We also have trading opportunity, another on pound dollar, but I also have my orders running because this is a follow-up to my session recap where I still think that 30.10 is rejecting the pound dollar. Then we have euro yen limit order 128.40 buy, stop loss here, and dollar yen also buy limit order. I will keep these trades until Friday and see what will happen. So let's wait. Another question, what I think about, what is 0.9 fib level? Ahmed is asking. 0.9 is 9% of fib. I'm testing this as a form of a very small retracement to see how it goes. So it's just used for testing purposes. I'm not using it on live trading now. I'm just testing something. And when I come with something, I will, guys, let you know. Okay, so that was all for today. And final question, can I repeat again what I think about gold? Gold could start selling from this spot. So if you go with a sell, you go with a sell position here, place stop loss slightly above the high. If it breaks the high, you close your sell, you add a long trade. You start with 1.1% of risk, add 2% of risk if this goes up. Then if you lose both, you lose 3%. If you win, you will earn 1 or more percent. Final target for gold could be weekly H3 because the price is in a range bound scenario. That was it, guys. I hope that you enjoyed. As always, I'm here to help you trade successfully, trade with Admiral Markets, guys, because Admiral Markets is also my brokers of choice. You can always, if anything is not clear, always contact support. Anything regarding trades, regarding teaching, just send an email to me personally, tarantulalfx@gmail.com. I am always glad to explain how this goes. I hope that you enjoyed this live trading session and that we will make pips from these trades that I made. Thank you for your comments. Bring your friends, bring your would-be possible traders here on this webinar. And I wish you a great trading week ahead. More analysis to come, more setups to come, and more education to come. As always, guys, cheers and trade safe. Bye for now.